I'm trying to like adopt a dog. Like I found the cutest like puppy and I'm holding it and like they're like, yeah, its name is Beth or something, and I'm like, oh my god, and this dog is so cute, and it's like
Beth.
I don't remember.
I love that name for a dog.
I'm really processing this. Like, who made that decision? They need to be fired.
It's like there's a litter of puppies like Beth and Karen and Cheryl or something, and I'm all about this.
And Wendy, don't forget Wendy.
Yes.
And so the woman working like volunteering at the shelter, she comes over and she goes, "Oh, sweet, like are you thinking about adopting this one?" I was like, "Yeah." She's like, "Okay, so this dog's gonna grow to be about 60 to 80 pounds." And I was like, "Oh my god, that's a big dog. Like that's
right.
I'm looking for a tiny dog." And she goes, "Yeah, it's also like a hound. Do you know anything about hounds?" And I'm like, "No." And she goes, "It really likes the sound of its own voice." I'm like, "What do you mean by that?" And she's like, "It will howl all day, especially if you're not home. It will just be howling like in your house." And
Wow.
That's a nightmare.
I know. So it's a giant dog that's going to be the size of a bear, and it's going to howl all day. And it's like, oh my god. And I just came to this realization. It's like, I have to put this puppy down and walk away from this situation.
Get your friend to adopt it. Just be like, hey,
That's a good out.
having your friends have cute dogs is the best.
That's
you
a
can
good
like
out.
play with your dog and leave.
But I was stuck in this moment where I had to put this dog down that I had made this emotional bond with, and it broke my heart.
Hey, Noah, do you know what time it is?
What time is it, Steven?
It is time to talk about death and taxes.
And then we do a little musical sting.
Got it.
Hey guys, welcome to Let's Talk About Death and Taxes. On today's show, we have a guest. We're sitting down with Jayden, who is a CPA, who works primarily with... Jayden, tell us about what you do, because I don't fully understand.
Sure, absolutely, yes. So my name is Jayden Doye, CPA. I help entrepreneurs become more profitable and pay less to the IRS through effective year-round tax planning, bookkeeping services, and business advisory services.
Awesome. Cool. And so on this show, we're going to ask Jayden some questions about what he does and see if we can also ask him some questions that potential clients might have, so that we can kind of steal some of the info from his brain. Sound good, Jayden?
Yeah, sure.
Fantastic. Cool. Guys, this is a show about estate planning. We answer questions about the two things that Benjamin Franklin said were inevitable in life, death and taxes. Cool. So... let's just jump right into it. Here we go. So Jayden, can you tell us a little bit about some of like your qualifications and and kind of just introduce yourself?
Sure. So I am a certified public accountant. So that means that I am licensed by the state board. Every state has different rules and regulations surrounding what constitutes someone to be a certified public accountant in that state. So the state of Georgia, you have to have 150 credit hours. There's a certain amount of accounting hours that are in that. You have to work under a CPA for a certain period of time and pass a series of tests. Some of the hardest tests of the nation, by the way.
In Georgia?
I think so. I think they're harder than the bar. Just
I know a lot of dumb people who pass the bar.
I love it.
And so now that that proves my expertise when it comes to working with publicly traded companies. And so being a CPA was not an easy process. Mm-hmm. Did you want me to kind of talk about that?
Yeah, we'll ask you some questions about that in a second. Just right now, we're trying to get some just qualifications. Why should people listen to you guys? So, Steven, can you tell us a little bit about your qualifications?
Oh, I don't have it, no. I'm sorry. But I'm an attorney at law. I'm the owner of Modern Estate Planning. We essentially help people, particularly families with kids, non-traditional families, get their shit together and get organized and make sure that if something happens that you don't end up in probate court. We do also handle probate cases, so if someone fucks up their planning, we will be happy to try to fix it.
Yeah, sweet. And my name is Noah Chrysler, and I do marketing.
I talk profanity.
Video.
Sorry.
You're good. And I don't know much about accounting. I think like I mentioned at the top of the show, I got not great grades in my accounting courses. And yeah, I know a little bit more about estate planning since I've been working with Steven. But yeah, anyway, the premise is that I kind of ask questions and try to dumb down some of the advice so that it can help someone who might have entry level like understanding of both of these fields. So cool. So Jayden, yeah, tell us a little bit about yourself and like why you wanted to become a CPA and that process.
Yeah, sure. So I'm originally from Prince George's County, Maryland, and growing up, it was so interesting to see the variety, the vast differences when it comes to household income, all in one zip code. And so it intrigued me to look at how is it that this person can live in this mansion, right? This person in their small family can live in this mansion. And then walking distance away, you have people that are barely getting by, living under the poverty line, maybe 7 people in an apartment. Wow. And so the concept of why people spend money the way they do and where they spend it and how they earn it was just interesting to me. So then coming into high school, taking an accounting course, in my 11th grade year, I entered into a business program. And a part of that business program, we learned things like how to create your resume appropriately. We had a good variety of business classes, and one of them being accounting. And not to toot my own horn, but it was easy, right? Cool. It was just something that I would always finish my assignments quicker than everybody else. So at that point in the 11th grade, that's when you have to decide what you want to do with your career. So it just made sense for me to go into accounting, and then studying it in college and going into the workforce, I truly fell in love with it.
Cool. That's awesome.
Can I ask, so I know there's a lot of different types of CPAs and some of that. Why working with small businesses and as opposed to sitting in some big company or big accounting firm, or working with any number of different sub areas of accounting? Yeah,
that's a great question. So coming into the public field, I worked at a small firm, and when I left that firm, I was responsible for hundreds of clients. And because I had such a large client workload, the level of service that I could give everyone was limited. But I realized, guess what? Business owners are just like regular people in the fact that they have issues when it comes to money. They need guidance on where to spend money, how to save money, and how to maximize their profits, and tax planning is a year-round process. And so I knew that in order for me to effectively help business owners and end entrepreneurial poverty, I needed to do it my own way and start my own firm, which is why I started Prestige Accounting Solutions. My goal, honestly, is to help those entrepreneurs who are like my father, who are barely getting by, just living paycheck to paycheck. And I think through education and through planning, it can happen.
Cool. That's awesome. Yeah, I resonate with that really hard. My dad owned his own auto repair shop since I was born, and I've watched him kind of not struggle. I mean, when you're the son, or when your parents are small business owners, you kind of watch the ebb and flow. Like sometimes you're riding a really high. The highs are really high, and the lows are like, hey, we don't have much money for Christmas this year, guys, and so like we gotta figure it out.
Right. The business is really like an extension of yourself. Like all your projections about money are right into business.
Right.
Yeah.
And thankfully, I never had that many Christmases like that. They were always very I love my parents. My dad's killing it, but sorry, Dad, I didn't mean to out you.
Well, look, I'll out mine. I had interesting Christmases where I would. One year I got a GPS, and I was so excited because I just never saw this man spend more than $100 on me, so cool. I could not understand how in the world he bought me a GPS.
Oh, that's awesome.
But then I opened it and I realized, oh wait, this is the GPS he's been using for the last 2 years. He bought himself a new GPS and gave me the old one.
This is closer to my parents.
Wow. Okay, got it.
Even though this is closer to my background in money. It's like, here's some stuff that we don't want anymore.
Right.
Would you like it?
I do have to clarify that as my parents were very, very kind to my sister and I, and they spent stupid money. I don't know. Yeah, I know. I don't know. I feel like they viewed it as like, oh, like we have a little bit extra. Let's funnel it into this.
But
And
what's
it's like, I
exciting
don't
about
know, which is
adulthood is
great,
to
but-
get your like first brand name thing or first new car or whatever. It's like, oh, that's great. New car's a terrible investment, but I was so pumped to get one instead of like a series of used cars. Like,
Yeah.
this is great.
Cool. Okay, so yeah, that's super interesting though to me. You know, working instead, like trying to. So basically, when you shifted to smaller businesses, do you have like fewer clients than like when you were just doing like personal accounting for everything? So,
Well, let's clarify what a small business is.
I was going to ask. Yeah.
Because I don't have the number off the top of my head, but I believe it's around $28 million or $1 billion that the SBA, like if you have less than that, the SBA clarifies you.
As a small business.
Yeah, as a small
My
business.
feelings
So-
are hurt. I feel attacked.
So when we're talking about small business, that is a large range of income. So, you know, the sweet spot for me are those businesses that are generating 6 figures. So still we're talking $100,000 to maybe about 10 million on an annual basis, you know, because that is where, you know, my firm has the capacity to really help them and for them to get the most value in working with my firm.
Because I know for a lot of people, at least for me personally, getting the first 100,000, figuring out how to do that was the hardest part. And then the second and third, that all stuff gets easier once you kind of built a foundation of a business. Like, oh, this is how I get a client.
Right.
Yeah.
Now, if you can bootstrap $100,000, that speaks volume to the type of entrepreneur you are. And I was able to get there. And, you know, once you get over that, then it's so much easier to put the systems in place to grow and scale.
Oh, yeah, because everyone knows, like, getting from 0 to 100 was hard. Getting
Right.
from 100 to $1 million, way less hard.
Now, a lot of people...
It's a stretch, but not as much of a stretch.
Right. So a lot of people quit before they even get to that 6-figure range. So, you know, some people just consider it a hobby. A lot of people are fearful of going full time into their business and really stepping into what their purpose is. And I feel like being a certified public accountant is my purpose.
Yeah, and you can kind of like help people and guide people into that process. I feel like, you know, in that role, that's awesome. Cool. Yeah. So, can you tell us like a success story that you've had with a client, like a client that, you know, started working with you? They might have been a mess. You kind of stepped in and there was a result from that. I don't know. Can you tell us a story like that?
Oh, absolutely. How
What's
much
a mess
time
look
do we
like?
have? Okay.
What's a bookkeeping mess look like?
No, seriously, everyone that comes to me knows that it's a mess, and I don't know a nice way to say that, so I'm just going to be very frank with it.
Yeah, people. Yeah, it's good. People come to you for that.
So and it's so funny because they give me this disclaimer in the discovery call, like, oh my God, it's such a bad mess, and then I tell them, okay, it's really not that bad.
Right.
I've seen much worse.
No tax lien. The IRS isn't calling you.
You know, like I've seen people with like 10 years haven't filed, no financials and stuff like that. So, you know, when somebody comes to me with 2 years that haven't been filed, that's not much.
That's not that bad.
Right.
I mean, logistically,
Right.
was it 10?
Yeah.
And no audits.
Right.
10 years audits pretty impressive.
That they know of.
That's true.
You know, transcripts may say something else. But I can tell you a story about a client. We're going to call him Johnny for confidentiality purposes.
Sounds good.
So Johnny,
You are bound to confidentiality too, right? Like lawyers are. You can't talk about your clients.
you
in public
know,
the same
I
way.
don't. Well, I put a confidentiality clause in my engagement letters, just so that they feel comfortable. I don't know if everyone else does.
Perfect. That's a plus. I'll note that.
Yeah, definitely.
Like cocktail parties will be like, Jim at blah blah blah.
Oh no, no.
That was a hot mess.
Yeah. Let me tell you why. Even if I wasn't bound to it, it makes me look bad because then people are going to be like, he's unethical. You know, I'm not that type of person that gets a thrill off of spreading gossip and stuff like that. So it just never works, period. So I just you know.
Oh yeah, but
confidentially.
Yes.
Tell us your story about Johnny.
So yeah, Johnny, he owns a shop in Georgia. Let's just say North Georgia. Johnny is a 6-figure earner, so he earns about on the gross, meaning just money that comes in from sales, about $500,000 a year. That's a lot of money, right?
Yeah, it's solid.
Unfortunately, this business still generates a net loss every year. Would you believe that? Can you imagine earning $500,000 on a gross every year and then still having a loss at the end of the year?
Not intentionally.
I can imagine that. Because
mean,
you got rent, you got employees, you got
Yeah,
overhead.
I've only
I
had
don't know.
situations where people intentionally. I'm in a law firm management program, but typically people might be like, "I'm going to run a loss this 1 year for a particular reason," and they know it. But that sucks to do it unintentionally.
Unintentionally. So, you know, when they engaged with my firm, I immediately noticed the first problem was that, guess what? There are no financial statements. So you can't really monitor the health of your business if you're not constantly reviewing the financial statements. So
Do people try to avoid? Is it one of the things people don't want to look at it because it feels uncomfortable?
I think that people just don't prioritize in it. I think they just get so caught up in the day-to-day operating of the business that they just don't put the time and effort into making sure that their accounting systems are in place.
Yeah.
Right.
And so first things first, we needed to get the accounting systems in place. So we created a QuickBooks Online subscription that we paid for. We entered the data, prepared the financial statements, and filed the past due returns. Then we moved on to the analysis phase. So this is where I'm conversing with the client on where your discrepancies are. And so I immediately realized that the cost of goods sold was too large.
So you're spending too much to do a service.
Yes, you're spending too much to produce a product or produce this service to your end clients. And so I did research on industry standard and saw that this doesn't even fall in line with industry standards. So we went line by line and vendor by vendor to verify what things need to be there and what things are not necessary, so that we can maximize on profits, not just revenue.
Yeah.
And so we realized a few things. First of all, the jobs that he's taking on are too small. There's no reason for you to take these little $200 jobs when you're also getting the $5,000, $10,000 jobs, which have a larger profit margin.
Right.
So unless it's above a certain threshold, you're not going to take it. What you're going to do is you're going to refer it out and accept a referral fee.
Because all the expenses are still the same. Like you have to still drive somewhere or do all the other back end stuff.
Takes all the time
for
and
210 million. Yeah.
Right. So we were thinking about adjusting prices, but that's more of a long-term gain. Yeah. So we just really delved into that cost of goods so that we can effectively get that down. So after about 2 or 3 months of working with me, then he started to generate a profit. Wow. Another thing is that the staff was not delivering to the level to which we needed the staff to deliver. So we had to put certain parameters in place as far as deliverables are concerned. We need to know in black and white what this person is responsible for, and if they can't get with that, in 3 months they're going to be gone. Wow. And so once we started holding staff accountable, then they started producing more, and the business started to do better. And so now this business is generating a profit. Now this owner can pay themselves a reasonable compensation.
So
that's amazing.
Wow.
That sounds like a really cool story, because I feel like every business owner has felt that way at least some point in their life, where it's like, what's up?
I was trying to be slick and signal her for some water, but
Just, do you mind grabbing some water?
Some in the refrigerator and some not. If you don't know if you want colder.
Non-refrigerated would be best.
Okay, cool. It's under the thing.
But no, I think every business owner has felt that way at a certain point in time, where it's like, okay, like they know that the problems are there, but there's so much fear, and it's probably new to them that they're not used to navigating these financial systems, like looking at these types of things, that they don't want to, confront that. So,
thank you.
That makes a lot of sense. That's super interesting.
Because I think a lot of people kind of view their...
I know, yeah. They're like, what's going on? Yeah.
Because a lot of people view their financial health as like, I have money in my checking account, without any of the other context around the financial health of their business. It's like, I could still make payroll, great, whatever, and not realizing that they're actually losing money. Because we're taking that small job, it probably feels like we're putting money in our bank account. Great, we're moving forward.
Yeah.
Yeah.
No, also, like, think about the type of person that it takes to be really, really good at that too. I mean, you have to have this level of like personal self growth that's like, you can remove yourself from the daily operations and take a 500,000 point bird's eye view look at your business and say, okay, cool. Like, am I making money or am I losing it? And that can be an awful, horrible, difficult thing to do. So I don't know. Your job sounds really cool.
It seems like it was an advantage that you're outside the business. Like
Right.
you don't you're not on their payroll, so you can come in and look at it way more objectively than if I was if the owner is doing their books and stuff like that.
Yeah. My next question I have here is how does estate planning kind of align with your field? So I know Jess kind of communicated with you a bit about how you kind of deal with estate planning sometimes. So yeah, can you speak to that a little bit?
Absolutely. So because I'm a CPA and not a licensed attorney, I can't put someone's estate plan together, So I have to pass that along to a professional such as
I can't do taxes.
So it definitely falls in line all the time with what I do, really, and people don't even know that it does. And so the biggest thing is, as a business owner, a lot of people don't have any type of clause in their operating agreement as to what happens when somebody passes away. And so even myself at one point, I was ignorant because I felt like at the time when I first started my business, my net worth was negative. So whatever happens, I'll let the state figure it out. Right. But then when my life started to change and I became debt free and the business is now flourishing, I don't have any children, so that was my excuse, right? But then once I started to get my estate plan together, it was brought to my attention, you don't want the state to handle your estate. You do not want it to just go to anywhere,
Or
right?
the most opportunistic family member.
Right. And I definitely don't want a family member taking over my business if I were to pass away. I would come back to life just to stop that, okay? I would say, hold up, God, I'm going to be right back. Let me take this elevator down real quick because I need to finish something real quick. So
I'll come back to life. And
Right. I just need 3 days, okay? I'll be right back.
I agree. But for y'all, getting a business, we've had business as part of the estates. If the books are bad or if it doesn't make any sense and someone's trying to take it over, it is such a nightmare. To we don't know how to run a business. Of course they don't know how to run a business. But
Right.
it's but they're trying to sell the business and no one knows anything about it besides it sells a widget or does this and it will probably go bankrupt.
Right. So my next of kin is an accountant and knows what to do, provided my my untimely passing. So that's one, a death of a business owner, and also there's ways to protect your assets in general, and there's a level of tax planning that's involved with high net worth business owners and real estate investors.
Cool. I concur with all that.
Yeah. Sweet. So business succession plans, that sort of thing. When
asset protection for really high wealth earners or tax, but gift and estate tax stuff.
Yeah, it's all about the WAP. You all heard that new song, right?
Yes.
Wealth and protection.
Yes.
That's what they're talking about.
As an old person, I applaud that. I was I'm 36 going on 80. That's inappropriate.
I love it. So great. So let's jump to some. So I stalked your social media a little bit, specifically the social media of the of your brand. I'm sorry, your CPA firm. One more time, can you?
Prestige Accounting Solutions.
That one. You give specific advice to law firm owners about specific strategic things and stuff. So I was hoping that we could talk about that a little bit. So what are some things that you see some small law firms doing incorrectly that they could be doing better? Is there cardinal things that you're oh, is it kind of same across the board, or is it different every case?
It is different every case. So one thing in particular that a lot of attorneys have difficulty with is trust accounting. And it's one of those things where people despise it so much that they avoid it at all costs if possible.
I feel targeted. I don't use my trust account. That's why. It's
as a layman, I don't know what trust accounting is. Can you give me an explanation of what that is?
Absolutely. So when an attorney receives a retainer, that money is to be deposited into a trust account, also known as an IOTA account. And as that retainer is earned, because essentially when you charge a retainer, you haven't done any work yet.
Yeah,
right?
It's all refundable at that point.
Right. So it sits in an IOTA account, which serves as a clearing account. And that money is not to be transferred into the operating account until it's earned. So let me give you an example. I retain a business attorney for $5,000, right? That money sits into their trust account. And then as they are reviewing contracts for me, as they are handling matters, whether that be litigation or small disputes, they're going to bill me.
Yeah.
And then they are going to they're earning the income, and as they're billing me, the funds are transferred from that trust account into their operating account.
Yeah.
To which then from the operating account they use to pay for expenses for the business.
Gotcha.
So the trust account, those funds are specifically held for to which you have fiduciary responsibility for the client, not for the firm.
Yeah, it's the client. Yeah, essentially it's all the client's money. Well, some of it is not. Well, I've varies. It's other people's money.
Yeah,
it's
no,
not your money
that makes a
till
lot of
you earn
sense.
it.
So do you kind of see people, instead of putting it in the trust account, they just deposit it directly into their own personal accounts, or not the personal accounts, but the accounts for the business?
Ooh,
No, never see that ever.
I just don't want to call anybody
No,
out.
but imagine what a more real. I mean, a lot of times people might earn money and then not take it out. They might leave money they've already earned in their trust account, or some other thing where they just don't keep track of it, or dangerously, their CPA might count it. If they're bad at bookkeeping, they'll count it as an asset of the firm, even though it's not. And so when their banker or something looks at it, they think the firm has a ton of money on hand, even though it hasn't been earned yet.
Gotcha.
So
I don't care if no one's stolen anything.
Yeah.
It just makes it look distorted.
yeah, the record keeping part is a difficulty in it, because people think, oh, my trust account is fine. Oh, okay, what about the customer subsidiary ledgers? So basically from that trust account, every client has their own account within that account. Does that make sense?
Yeah, that makes sense.
It's a giant bank account.
Right.
Well, for some people, a real estate firm, a closing firm might have like $100 million in their trust account, and they have to figure out who it goes to.
Right. And so if they don't have the good record keeping policies in place, then that becomes difficult for them.
Gotcha.
And you can be disbarred for not having good trust account records. When they audit them, they'll ask for certain things like a 3-way reconciliation. And if they're not working with legal specific software, then it's going to be very difficult to to provide those reports.
Gotcha. So cool. So if I ever become an attorney, which probably will never,
Saving money.
If hell freezes over, then if I start operating as an attorney, I would have to do this thing called trust accounting.
Potentially.
Do other professions do this at all, or is it just mainly the legal field?
Yeah, there are definitely other professions, insurance being one of them.
Gotcha.
If you're an insurance broker, sometimes what happens is when the clients make the payments, then it goes into that trust account, and then it goes to the bigger company, and then from that the company will remit commissions to the owner of the agency into their operating account.
But in theory, a law firm can operate without a trust account. It would just be a huge logistical pain. Like every time you build work, you would then have to bill it to the client and then hope that the client then pays it.
Right.
Whereas the trust account's like an insurance that bill will get paid.
Gotcha. Cool. Okay. So,
but it sucks to account for it.
yeah. One of the things that I saw on your Instagram was that one of the tips you gave was charge more for your services. And so I kind of want to talk about that. So, like, why do you think small business owners have this tendency to undercharge for the services that they offer or the products?
Well, I think a lot of times small business owners lack confidence. And I know that sounds like really brutal to say, right? But I think people really need to hear, like, especially if you have a specialized skill, a lot of people are charging below market rate. Now, I'm not telling you to charge the highest rate that you can possibly charge, but what I'm telling you is at least look at the market rate and look at the value of your deliverable and look at your price from there. Because a lot of times people, what they do is they come in at a lower rate because they think that's what's going to give them business. And then two things happen. One, people don't respect you because they feel like, oh, you're cheap, you know what I'm saying? So, you know, you can't be that great. And then two, what happens is or they can get so much work that they get overworked and they're not able to give that value to the client because they took on so much work at a low rate. Now you can't even hire somebody to do the job, but you have to do it yourself.
Your cogs are so high. Yeah,
Right.
It never changed the cost of goods sold. Right. That's, yeah.
Yeah, no, I've dealt with that a bit myself. Like I've dealt with some of my friends, and I personally have tried to like start like, photography businesses or something like that. And the biggest cardinal sin that you can make is like not charging enough for your services, because then, like you said, you get one time we shot a wedding for like $300 and it was like a lot of work, and it's like, cool, like this is crazy.
Just as much work as billing $5,000 for it.
Exactly. And on the off chance they said no, it's like, okay, cool, like go
Get
find
your
somebody.
weekend.
Yeah, go find somebody that will. Have a number where you don't get out of bed. Like that's really good advice.
Every time I've charged, it's advice I've learned the hard way. Every time I've undercharged for something, it comes back to bite you.
Always. I always regret. I always say to myself, see, this is why I don't. ...
Yeah. No, it makes sense. Cool. Yeah.
But you'd rather have no bid. If you had between like 100 clients at $1,000 and 500 clients at $2,000, you always want the latter. Yeah. Whatever the number, the fewer people and better service, and you can.
Yeah. I think also, like what you said about confidence, I think that's also huge. Cost-based pricing versus value-based pricing. Like don't charge how much you perceive it as. Charge it as like the value that the customer receives from you interacting with them.
There was a joke about the attorney. Like, this guy was in jail and he was called his defense lawyer. It's like, how much do you cost? And he was like, don't worry, I'm the most expensive lawyer in town. And that's the kind of confidence that gets you out of jail. Like the guy who charges $20 in a billboard's not going to get you out of jail.
Right.
The guy who charges you a small fortune, they'll get you out.
Right. No, that makes sense. Cool. Sweet. So, great. So the IRS, here's what I know about the IRS. I know that they're scary. I know that I never want to be audited. I know that they think they probably know how much income tax that I should pay, but they still make me calculate it anyways. And I know that I never want to have someone knock on my door or send me a letter or give me a call.
They won't call you.
They won't call me?
No, they won't.
I assure you, I've had more than one person like, the IRS called me. It's like, that's not the IRS.
Okay. That's what I know about the IRS. Should I know more? What are some things that I should know about the IRS from someone who frequently, works for the IRS?
It's really not that serious. Honestly, the IRS are just like the student loan people. As long as you communicate what's going on, then they're willing to work with you. Mm-hmm. It's about people just not communicating and thinking that they could just not file their tax returns and that all their problems will go away. And if that was the solution, to just not file for the tax liability to not generate, then a lot more people would be doing that. But unfortunately, It doesn't work that way. It puts you in jail. So with the
or that interest rate, that penalty is going to kill you.
Right. So the IRS does charge what's called the underpayment penalty. If you basically, if you're self-employed or entrepreneur, the IRS expects you to pay 90% of your taxes within the calendar year. So a lot of times entrepreneurs are seeing where if their tax liability is above $1,000 when they file their tax return, then they are hit with that underpayment penalty because they didn't pay enough in their quarterly estimated tax payments. And so as entrepreneurs who don't have an accounting background, it can be very difficult to figure out how much should that payment be. And so that's why it's so important to work with a tax professional that specializes in tax planning.
Because imagine a lot of entrepreneurs, they aren't used to quarterly taxes. If you've gone from like a W-2 job where you just the quarterly tax filing does happen by your employer, but in behind the scenes. But for a lot of people, it's like, oh, I had to file my taxes 3 times last year. Now it's April or whatever your cycle is, and it's like, crap. Are people is that common? And people get a tax bill and get scared?
Absolutely, and a lot of times, even if the bill's like $12, they start panicking because they think they're going to get levied. It says intent to, It's really, before the IRS takes any money out of your bank account without your permission, you're given a amount of warnings.
Like I've got months, years.
I mean,
I've seen years. I've seen multiple.
At least a year. I mean, I honestly, I have never seen it with less than multiple years of sending notices and communications. They try for a long time before going to extreme measures.
And they'll take a payment plan. And I assume they'll take like their
absolutely. If you meet certain requirements, then you're definitely eligible for a payment plan. There's, I mean, the tax resolution piece itself. There's so many different avenues to which you can take that. You know, one shouldn't be fearful of the IRS. There are so many different options on either reducing that liability. A lot of times people went to the person that does taxes beside the Popeyes that they're opening up. And, you know, that person doesn't really know what they're doing. So they put anything on
They are
there.
not tax professionals.
Right.
They're seasonal employees that took a 2-hour training.
Right. They're actually, they haven't been trained yet. They're being trained as they're doing their tax return.
This is their taxes are their training.
Right. Let's be real.
Yeah.
So, you know, that person incorrectly filed that tax return. So then they come to me for me to properly file that tax return. And then I can pass them to an attorney friend of mine that can handle the tax resolution process in a timely fashion.
But is it so? It's still probably better to have filed that bad tax return. At least you don't have like a failure to file, or the IRS isn't like.
Oh, absolutely. Yep.
So a bad tax return is better than no tax
I
return.
mean, you want to fix it, but
Well,
you just want to start. If you're ever worried you did something bad in the past, it's probably better to have filed than not to have filed, I would imagine.
Yeah.
Gotcha. Cool. Okay.
But IRS won't do that. I mean, unless you're like, was it Wesley Snipes or the guy who got the stack?
Okay, so let's talk about that because
I love that story.
I do have a good amount of sports and entertainment clients, and the issue is they're getting all of this 1099 income from various entities, and nobody is doing the background check to see what is on file with the IRS, because a lot of times these affluent taxpayers are so disengaged in that part of their business that sometimes they don't provide all of the information needed, and that's because they just forget about it. And so it's very important to make sure that when working with clients that are in the sports and entertainment field, that I'm making sure that I have everything that I need, all bank statements, all bank records, all sales reports, so that I'm making sure that I'm reporting all sales. You know, we're not going to try to be slick and not report something. No, because it's already on record. Let's just be honest and report everything, and let's just verify what expenses we can legally take to mitigate this tax liability. But a lot of times I'm telling you, a lot of times they don't even file. It's just and it baffles me because I just don't understand, like, how do you not how do you not know someone that knows a good CPA to help you file, right?
Like your banker, your manager, or someone's like, you should probably get a tax person to help.
Right. I mean, it's just like brushing your teeth. It's just like you know that you have to do it. So
death and taxes.
Right.
Yeah.
So can I speak to that? Let me tell you a story. So this is going to be really embarrassing because I'm a grown-ass man and I should know.
To be your child, don't worry.
I
No.
know. But so I grew up and my first job, I was 16 years old and I worked at a grocery store, and I worked there for a couple years, and I was a lifeguard and whatever. The entire time I was like growing up, my dad had an accountant, right, for his business, and so like he just had him file his personal tax return and stuff, his business one or whatever. And then like he just had mine done through him, and I was like, okay, great, like I don't have to worry about this, right? And so like I kind of grew up my whole life never having to deal with like, okay, I have to like submit my taxes, right? Cut to 2 years ago, I moved down to Atlanta, Georgia, right? And suddenly like my dad's accountant is not taking care of my taxes, and it's like, okay, cool, like I suddenly had inherited this new thing that I knew nothing about, right? No idea what to do. I knew it was important. Because I knew people would put me in jail, right? So like cut to me like after the date, I stumble into like an H&R Block, and I'm just like, hey, help me, I don't know what I'm doing, right? And so like I don't know, I think that's super interesting because you live and breathe this every day, and you know these things, you know how important this is. But to somebody like me, I don't think it's shocking at all that somebody in even at that level who's making all this income like has no idea about the importance of this. I'm like,
no, I think it is, because when you're at that level and you're purchasing vehicles and properties and they require tax returns,
okay,
different. You know, how'd you even get the house is
Right.
my question if
Yeah.
you don't have your tax returns filed.
Yeah.
I think a lot of it's so much easier sometimes with W-2 because it's like, oh, there's a sheet.
Right.
And then
Right.
as an entrepreneur, someone who just gets like contractor freelance type stuff, it's
Yeah.
you just get like this. One of my friends who will go, he literally had like a box of like 1099s and paperwork that he would just bring every year. That's like a real tax thing. It's like it was like, what is happening? I was like, why has your CPA not murdered you? It's like,
We also had this business coach in college, and he told us about he was like, he was working for this winery, and he said, I can't have our consultation this weekend. I have to go to this winery and do this. He was sleeping, like he had like a hotel room there, and he like would spend the weekend like digging through like the receipts and stuff like in like their back office because they didn't have any electronic records. And he said that like that's what like a common thing that he would do, trying to like help and bail out.
okay, can you imagine if he had just had someone, even if they charged him a ton of money to relieve him of that like mental bandwidth for the whole year?
Right. That's how I really break it down to clients. I'm like, I mean, I make it pretty clear. I'm not the cheapest on the market. I lead with value, not with price. And so, you know, even if, let's just say hypothetically, I charged you $2,000 for something, what is your billable rate? Okay. If your billable rate is, let's just say $500 an hour, and it's going to take you 40 hours to do this task, look at how much money you're missing out on.
Right.
Versus just think of it as 4 hours of your time saving you 40 hours.
Not just the time you're doing it, the time you're thinking about it, the time you're like, did I mess that up?
Right.
Like you're in the shower.
Right.
Yeah.
that makes sense.
Same thing happens with states. Can I ask you a question, also like a tangential? What do you think about like, this might be different for entrepreneurs, but like, and clients you would typically work with like the TurboTax or the online thing. It's like, I'll just do it online. I'll throw something together. It's fine. Is that something that's a good, viable solution for? I know your answer, but I want to. But like, what is that a good viable? What would you say to like a business owner, someone who made like $200,000, who was like, I'm going to do a TurboTax return this year. It'll be fine.
It won't be fine. It's going to be wrong, and you're going to overpay the IRS. I would tell them that.
Oh, no, overpay. That's part of the problem.
Yeah, you're going to overpay because this is not your expertise. You should focus on your expertise and whatever that is to generate more money, and let a professional take care of this.
I wasn't actually about prepared for that, the overpayment part. I thought you might be you'll get audited. But you can save
that's a possibility too.
You can save the money. There's a likelihood that you can save the money rather than just winging it online.
Absolutely, most of my clients are saving anywhere from $15,000 to $75,000 in taxes.
So when they pay you $2,000 a month or whatever, if you pay $25,000 to save $75,000, you would probably be a dummy not to like.
Exactly. That's what I tell people at the end of a discovery call. Don't think about the price. Think about what you're missing out on. Think about the savings. Like, you would literally be a clown.
Right.
I don't say that.
All the time like
no,
your
it makes
family,
sense.
your kids, your dog, whatever it is, or boating, or whatever your hobby of choice is, rather than doing this paperwork.
Exactly. So, I mean, the value is there. You know, it's clear in black and white. So.
Cool.
Yep.
Sounds good. Okay, we're gonna shift gears a little bit. So I pulled this question from the internet. Basically, you're a tax professional. Steven is an estate planner. You're not a tax professional. That's different. That's a different
He's
thing.
a CPA.
I'm sorry. I meant
Yeah.
I meant that as like a nice term, a complimentary term, not like a
He
shot.
worked harder
I'm
than
sorry.
mine.
No,
The CPA requires more hours. Like, they literally for law school, you have to graduate from law school and take a test.
I just meant you guys know your stuff. So you're two experts. Cool.
Like, I'm not allowed to officially. You can call me an expert, but I can't call me an expert.
Okay, I think you're an expert. Sweet. So I pulled a question to get answered by you guys as a panel of experts. Here we go. It's a little bit long, so strap in. Here we go. Can I legally access an IRA to be split 3 ways? My father passed away and left 3 IRAs. Per his wishes in the will, this is to be split 3 ways between his 3 children. I have talked to 3 separate customer service representatives from the company who says the beneficiary of the IRAs are the individual children and not the estate or the trust. They also say that I can legally access my third of the IRA. My father's CPA/tax advisor also tells me I can access the IRA, that I shouldn't I'm sorry, and that I should in order to avoid tax penalties. My brother, who's the executor, tells me I cannot access my IRA because it has to go through his lawyer and be cleared with the executor on the ex-wife's side of the family first, and that if I access my third of the IRA, I will cause problems and be voided from the will. Should I access my third of the IRA?
Okay,
that's the question.
Don't look at me because
I'll kind of attack it, but who's the beneficiary of the IRA?
Yeah, there's such a layered question.
But it's like premised on what the document actually. So if the IRA actually has a beneficiary and says the 3 kids are the beneficiaries, it does not pass through probate. It's not part of the estate. The estate attorney is mistaken.
So the precedent is what the IRA documents say.
Actually, yes.
And then it's going to be the will and testament.
Yeah, if the beneficiaries are blank, then it would go into the estate, and then the executor would have to follow whatever the will said.
Right. So the executor is just saying that because he wants to keep it.
Oh yeah, the executor also gets, if in most states, in Georgia, the executor gets compensation of about 5%. So it passes into the estate account. The executor has to peel some off, and also the lawyer gets to bill against it.
Gotcha.
But in this situation, assuming that the company that manages the IRA says we'll give the IRA to you, they tend not to be in the field of getting sued. So I typically believe that it would go to the 3 of them. Whether they should take it is a complete, or how they take it's a completely different issue.
Right. Like, do you want to piss off your family and then have
no.
other stuff?
Well, not even that. That's cynically like how much taxes is it worth? Will you get a tax penalty by taking it? Like if you're under, was it the mandatory, the minimum age, I think it's like 57 and a half or 59, whatever it is, you'll take a higher tax penalty than if you're older and take it. So the beneficiaries, if your dad was like 90 when he died and left you a bunch of money in the IRA and you're like 65, you could probably take it and you'll probably be able to work with your tax person to see if you can minimize your tax burden. It's a lot harder when you're 35 and taking it out. You'll probably pay some regular income tax on it out the gate. That's much higher.
That's wild. I did not know that. So like you pay less taxes
and there's weight issues
when you're older?
Well, you can control the tax flow out. So since we have a progressive tax system, if you take all of it at once, for example, which you are often mandated to do, then the higher amounts have a higher tax rate applied to them.
You're saying that
but if you're older, you can cut it at a much lower rate and spread it out.
Gotcha.
More so
if you're retired and you're not making as much income and then you choose to take it then, like you're not going to hit that higher tax bracket.
Your goal is to take it all at the lowest tax bracket. You will pay taxes because IRA was pre-tax income. It wasn't no tax had been paid on it. So someone will pay tax on it eventually. Your goal is just to pay the least amount. And if you have good planning and pay with the federal government, these federal rules have changed a lot and laws have changed. So I have to do with the last recent major change in tax law. But there was a golden age where you could inherit an IRA and just roll it into your own retirement and then let it sit there until you retired.
Cool.
Now it's not as true anymore. Maybe we'll come back to that. We'll see.
So basically, the answer is yes.
Read the IRA.
If what this person says is true and the IRA, is in their name, then they can go ahead and access it. And the brother has an incentive to say, "Oh, you can't do that."
He wants it to.
He wants the money.
But yeah.
Gotcha.
It may not be true, but just because your brother said, as a youngest child, just because my brother said something doesn't make it true.
Yeah. Cool. Okay, great. Let me ask you guys some more questions that don't come from the internet, that come from my brain and Jessica's brain, who helped me plan the show. Just wave so that people. Cool. What can I do to reduce the amount of taxes I have to pay out of my estate at the time of my death so that I can leave more money to my heirs? You guys are going to set me up. I come to you guys.
How much money do you actually have?
Let's say I've got $1 million.
You're
Me
good.
personally, I have to.
I was about to say. I'm not even sending you a link to book a call at this point.
Yeah,
if
really?
you have $1 million estate, you have no estate. If you're in Georgia, Georgia has no estate tax. Some states do have estate taxes, like New York, I think Iowa. Some random states have estate taxes. But if you're in Georgia and you say you have $1 million, I'll be like, enjoy yourself.
Let's say
I'll take your probate case.
Let's say I have $100 million.
Yeah, now we're talking about something.
Okay, right.
Now what are we gonna do?
And are you married or single?
Oh, I'm super married. I got 2 ex-wives.
Or rather, was your parent was the person who left you with, were they also married or single?
Was the person that left me married?
Yeah.
No,
or
he's
single?
saying that he's.
Or you're doing it for your own estate.
I'm gonna do it for my.
Oh,
I'm gonna
that.
die.
Last question.
I'm gonna die soon.
But you're currently married too.
I'm 85 years old. I'm currently married. I've got 2 ex-wives. I've
Okay.
got $100 million in the bank.
But
I've
are
got
you
a bunch
married
of
right
yachts.
now?
If you're married right
Yes.
now, it would help.
Yes.
Okay,
I am.
he's married right now.
Okay, because right now under the current tax law, you have as a rounded number about $11.5 million as your exclusion.
Okay. So
That
she
number
gets
changes every year.
She gets $11.5 million untaxed. Just she
More or
can have
less.
it, more or less.
And you can double that deduction, more or less, because you're going to take advantage of all your deduction and then all of her deduction when it comes time to pass it down to other people.
Okay.
So your goal, in a best case scenario, though, of tax planning, that is just, you can just pull, with the right trust planning, you can just pull that straight off the table.
Mm-hmm.
And now you're going to look at a lot other vehicles to transfer without the estate tax, which might be some variances of fancy forms of gifting or investing or charitable gifting, which can be in the form of charitable trust or really lots of things that will cost you whatever legal fee I could think of to charge you for it would still be cheaper to draft a trust or whatever to protect it, would be a drop in the sea compared to what the government would take of it.
Absolutely.
So you've had federal tax rates, state tax rates can be pretty high.
So you're saying, okay, so about 30 million is good now since we've got the.
Well, not great. Well, if you have more than $11.5 million, start talking with your estate attorney.
Okay,
that's out of the gate about. That's
I
the
do.
first thing
I have
you'll
100
mention.
million.
That's the first thing you mention. I have $100 million, and then I say congratulations on $100 million because you're. And then we'll put together. Then we'll start the document side about how to plan that. But there are going to be a lot of particular tax considerations, and I'm going to loop in CPAs because there's a lot of very particular. It also depends on how you have your $100 million held. So it's like partly it's held in your business.
Let's say it's cash. I cashed everything.
Oh
out.
God!
I sold everything.
We could do a lot of things with it too, but all cash.
Yeah.
You're not making any new money.
No,
You don't have no real estate?
Got it in interest. I sold the real estate. I'm cashing out, guys. I just wanted to see how big I can get that number. I know it's weird.
Okay, I'm gonna punt it over it because there's a lot of things that you could do with that money. If you're parking it in cash, you could, and cynically you may, if you're at the most aggressive, you may want to jurisdiction shop your money as far as what states and stuff it ends up being a part of, and you might want to even move. This is a time to consider a move to Florida, potentially. Like, if you live in a high-tech state like New York or something.
So hold on a second. So just to kind of get back
there's
to
a lot of considerations that you're going to look at.
Okay. Okay, so the answer is it depends. It's probably very complicated. Is that kind of...
Once you cross $11.5 million, you're going to get into the complicated.
Gotcha.
And there's and also for some people, they might look at their entire estate tax burden and say, I'm willing to pay it. Because for reasons, all the proposals that we can make up, they was like, oh no, I want to control every single dime of it. So they made us get a life insurance policy to pay off the estate tax. So they may do certain known things to satisfy their tax thing, or they made us take a chunk of that and lobby their senator or something. Who knows? But they can you can do any number of things. We just want to be aware of what the balance sheet looks like and what your worst case scenario is. And then if you're cool with it. I just want to make my clients happy. If they're happy with their estate tax bill, then that's great. I don't think most people. I've never met anyone who was. But if you have kids and other things, you can really, really, really lower that bill. And if you're paying the estate tax of $100 million, it's because you've chosen to.
Interesting. Cool. All right. Well, with that, I think we should end out the show. Guys, thank you so much for watching. Let's talk about death and taxes. Jayden, can you go ahead and tell us where people can find you and how they can interact with you and hire you to do all of their tax accounting and pay you a lot of money?
Absolutely. I can be found online if you go to Prestige Accountants with an S.com. I can be found on Facebook with my name, T. Jayden Doye. You can find me on Instagram at The Great Jayden. You can find me on LinkedIn, with my name again, T. Jayden Doye. And you can email me at jayden@prestigeaccountants.com. Email is probably the best way to get in contact with me because most of my day is spent consulting and serving my clients.
Fantastic. Cool. And guys, you can give us a call anytime if you need help planning your estate, making a trust, doing probate stuff, literally anything about end-of-life legacy preservation. Give us a call, 404-939-7562. You can send us an email at info@modernestateplanning.com. Guys, thanks so much for watching. Hey, also, we just created an ebook that is linked in the description of this video. It's the first link down there. It's called The Most Common Mistakes to Avoid When Planning Your Estate. You can go grab that ebook, and it will help you avoid some of those big mistakes that our attorneys have seen individuals make. So go ahead, get that ebook. It's down there in the description. Jayden, thank you so much for coming on. Seriously, it's been great to talk to you. And yeah, guys, have a good one.